Good evening and welcome to the first ever recording of Keep the Score, Insurance and More. Why do we keep score, Mike? That's the only way you know who's winning. I'm your host, Bobby Roberts, and this is my brother, Mike Roberts. Who's better to have the first ever guest on the show than someone who I really can't screw it up with. So I'm the host of the show. I'm also the president and founder of the Kentucky Insurance Agents Network. I work in the insurance industry, have about 25 years of experience total, all up in insurance, investments, mortgages, you name it. I've been there, I've done it, and I currently work in the insurance field now. So without further ado, I'll let Mike introduce himself, and then we'll get started. We're just going to have a little conversation today. So,
well, Bobby, thanks so much for having me on your first ever show. If I know anything, I know this show is going to be legendary, and so I'm honored to be a part of the very first episode. Thank you so much. I'm Mike Roberts. I'm Executive Vice President for Mortgage Warehouse currently, and I'm from Fort Myers, Florida nowadays. Originally here from Louisville. I carry about 20 years. Actually, I'm celebrating my 20th year in mortgages this year.
Wow.
So time flies.
20 years.
20 years.
So what did you do before you got into the mortgage business?
Believe it or not, I sold televisions, electronics, and appliances at a company called H.H. Gregg back in the 90s.
Wow, how was that?
Yep, it was good. It taught me how to sell. It taught me how to interact with people on a daily basis. It's one of the best street educations I think somebody could get. Very high-paced, rapid environment where folks would walk into the store and you'd be dealing and talking to, as many 100+ people a day sometimes on a busy sales floor. And so as somebody young starting out, you immediately learn to pick up some valuable communication skills and things that have carried me well and served me over the years.
Gotcha. Awesome. Well, that's good. I started out, my first ever sales job was at Foot Locker, if you remember, in the town mall in Elizabethtown, Kentucky. And who knew that you got, commission off selling, shoe cleaner and things like that. But you're right. Things like that teach you how to sell, teach you how to interact with people. And, my friends were out flipping burgers, and I was, wearing, a uniform in the mall, hitting on all the females that walk by, a little bit better than McDonald's, right? So as far as the mortgage business that you're in, I know that you've got a couple of accolades. I've seen some things floating around Facebook and things like that. So I know in the 20 years that you've had, I know you've been in a few different capacities, but tell us a little bit about some of that hardware you picked up along the way.
Hardware, okay, yeah. Right now, last year I was rated as the number one or one of the number one mortgage loan originators in Southwest Florida in Forbes magazine.
Forbes magazine, there you go.
So you may put me on the spot here a little bit, but yeah, I was mentioned in Forbes magazine, which was a big one. I'm also I actually got a award last week for the 7th consecutive year. I received the 5-star Mortgage Professional Award, it's a customer service ratings-based award that's given to the top, 2-3% of mortgage professionals in our industry. Been multiple time here in Louisville locally, the Business First Fast 50, where we've been one of Louisville's 50 fastest growing companies that made the book of lists several times. And so other things, Loan Officer of the Year, Loan Officer of the Month here and there. And so going back up in yeah, right. So going back, we've done all right for ourselves.
Awesome. Yeah, Business First, that was pretty good to me too. I got one of those things. I still have that product. 2005.
Sure do.
Not trying to date myself. Yeah, 40 under 40. Back in 2005. So that was pretty. I remember when I got that. It was unexpected, but it was really nice.
I'm sitting here in your office. You do have quite the hardware collection.
I've got a few things that I picked up along the way. Nothing like you probably have, but
I think mine's a little bigger.
Well, let's just go ahead and move on from that before I say never mind. So obviously, I'm here to talk about insurance. So that's what that's what I do. But I want to incorporate every one of these that we do. My goal is to help all insurance agents and everyone in the business grow, whether we talk about marketing or
we're talking insurance agents here is who we're talking to.
Yeah, that's well, we're talking to insurance agents. We're also talking anybody that's in business really, because I want to keep this to where pretty high level to where anyone can kind of fit in, but for the scope of the conversation today, what I'd really like to talk about is, in our business, a lot of research has been done, and it's like the old ways of marketing, it doesn't work. I mean, insurance agents used to put something in the yellow pages. They used to, be, in the newspaper. They put a nice, expensive spot on the corner in a retail spot so that they would have high visibility. People would walk in, and all that changes. It has changed. So now it's like, okay, how are we going to get referrals? Because obviously those are the best, right? Referrals are always the best. Well, in our business, a lot of research has been done that says one of the best referral sources are, guess who? Loan officers, mortgage originators. And so
that's why my phone blows up with insurance.
There you go. It's like, go get them, go get them, go get them. Let's go have every mortgage company and every loan officer send us all their business, and that's going to solve all of our problems. And that's why we stay up at night. How are we going to get the next one? And that's going to solve all problems. So, as you just mentioned, that's why your phone blows up. So, what I'd like to ask you, just kind of point blank, is what advice would you give to a to an insurance agent or an insurance producer? What advice could you give them on what some best practices they could use to be successful when calling on someone like you?
Sure. First of all, the research that was done is true, because as a loan originator, I'm in a very strong and unique position to provide referrals to insurance agents, because obviously you're working with a first-time home buyer who's buying the first house. They come to me first. They come to get the mortgage pre-approval. And so then they find the house, and usually connected to a real estate agent at that point. And once the house is under contract, that's when it's about the time in the process to start thinking about, hey, I need home insurance. And usually, we've already become the trusted advisor at that point in the process. And so usually the home buyer looks to me, hey, Mike, what do I do about insurance? Or it's actually me going to them because we need the insurance for underwriting and they don't know any better. And so I would estimate, if you give me 10 transactions, I would estimate at least probably 8 of them, a very large percent of them need an insurance agent. So I'm now in a position to be able to provide that referral. And so the research is true, and I hand out a ton of referrals. Probably, I would guess, 80 to 100 at least a year in solid written policies. And that's just me, and obviously I'm in there with a team of other loan officers. Between the office, there could be literally thousands of referrals going out on an annual basis. And so it's an incredible source of business. It's something that any insurance agent should seek out. So that's the good. The bad is that all the insurance agents in the whole wide world know this.
They've all got the same secret sauce.
They all got the same, so that's exactly right. And so my phone rings every day, man. I mean, I'm constantly inundated with calls and emails and solicitations from insurance agents. Hey, Mike, what can I do to get a piece of your business, and so on and so forth. And honestly, it gets old, man. You're sitting there, I'm trying to originate mortgages, and it becomes a disruptor for me. Oh, it's just another insurance agent. I mean, no, I've got plenty, thank you very much. So ultimately, what I found is it comes down to relationships. You're in the business of you need to form a relationship with people, and that's what you're looking to do. And so, for example, you're my brother, man. And so, obviously I'm in Florida now, but if I were here in Kentucky and you're an insurance agent, well, I'm probably going to refer the business to my brother. And so insurance agents out there, if you're listening, whatever loan officer you guys are approaching, you're asking for business, they've got relationships, they've got family members who are insurance agents, they've got close friends who are insurance agents, what do I do? Do I just give up? No, you've got to learn ways to provide value to the loan originator. I can tell you right now that if an insurance agent say, hey, Mike, I've got somebody, they're looking to buy their first house, can you help them out? First look to say, what can you do for them, and bring something to the table. And that's the beginning of a relationship. That's going to get the attention of the loan officer. Whereas just, hey man, can I get some business? You're going to be one of hundreds, and you're probably going to fall on deaf ears. So that's where it starts.
Gotcha. So, everything's relationship. I mean, it's all relationship, and that's where it starts. So let's just say, obviously, if I said, hey Mike, I've got a deal here for you. They've already signed a purchase contract. Now they just need the financing. Here you go. Well, obviously you're going to say thanks, and then you're going to feel like you owe me something. But that's the best. That's obviously the absolute best referral that you could be provided, right? Here you go.
Absolutely.
So not everyone out here listening is going to have that to give you. So other than a loan, which obviously is the best. But are there other things that they can come to you with and say, look, Mike, I know that maybe some of your pain points are possibly slow turnaround times when it comes to, updating the insurance policies or the mortgagee clause. I mean, are those things, if they came to you and said, look, here's what I can do for you. I can promise you that within 24 hours or even 12 hours or something like that, I'm going to be updating whatever you need. I know that sometimes it changes because sometimes I know in your business, you probably sometimes start off with one investor that you're going to go to, and then things change. And so the mortgagee clause has to be changed a few times. So speed is of the essence. So if they come to you and are there other things other than giving you that loan, like speed, service? I mean, what other things are
those things? Those things are all extremely important, and the loan officer any loan officer approach is going to want those things. They're going to want, hey, I want to make sure that you're going to get this mortgagee clause updated, get the documentation over. A lot of them are almost instant anymore, and so it's something that we can usually do on the spot. If it's taking any more than 2 or 3 days, it's usually going to be a problem. It's going to slow things down. So the loan officer wants speed. They just want to get the insurance over and done with so they can move on to the next portion. They want competitive pricing. They want good premiums, and it's important from the loan side because there's a thing called debt to income ratio. That's the number one reason for loan denial these days.
Wow.
And so the lower the insurance is, the lower the consumer's outgoing house payment's going to be, and the more house they can buy, the more they can afford. So loan officers want to see good competitive premiums. It helps them makes their job a little bit easier because I can show the customer, hey, your house payment's only $1,200. It's not $1,300 or $1,400, whatever the case may be. So the lower the insurance, the lower the payment, the better it helps me out. Then, third is they want to make sure the coverage is good and not going to create any underwriting problems. When the mortgage loans reaches underwriting, they're looking at, hey, how much coverage do we have? Is it enough to insure the loan? Is this everything in good working order here? Is the deductible in line, or is it astronomical where this person's going to be bust if they've got to pay that? And so good quality coverage, good quality price, quick turn times, those are things all important. But those things in itself, they're not going to win you. They're not going to win you a loan officer because everybody's promising those things.
Gotcha.
Those things, that's a quick way. Not delivering one of those is the easiest way to get fired from a relationship, but it's not probably going to be the make or break that gains it. You could be, there's the timing, you can get timing leads. You could be in front of the loan officer on a regular basis, and you just might run into the scenario where he has the one deal. Hey man, I just happen to be working the Smith file right now and he needs insurance, here you go. So if you just be that pest, that person who's in there constantly, emails every single day, calls every single day, showing up, you might get a handful of deals, but if you want the true, reciprocal, if you want the lion's share of the referrals, it's gonna come. You're gonna have to bring value to that loan officer. I can't think of a better way than bringing your own referrals. There's some things, other ones, we get taken out to lunch often, things like that are nice. It'll get, some of the timing leads, but ultimately it needs to be a relationship.
One thing, and I'll share this with you, and just so I can share with other people watching, but when I started my insurance agency, I said, I got to do something to differentiate myself, because at the end of the day, every one of my competitors had the exact same thing that I had. They had the same rate, they had the same carrier, they had exactly what I had. So the only way that I could differentiate myself is to, service and all of these things. And one of the other things that happened for me is that, believe it or not, I went into because all insurance agents think, especially when they're new starting out, okay, I'm going to get some quick policies. Where can I get those? Renters insurance is pretty quick. Okay, where do the renters hang out at? Apartment complexes. Great, let's go call apartment complexes, right? So guess what I did? Went and called apartment complexes. So this was probably 2011, I guess. I go to an apartment complex, and I'm sitting down with the lady, and I took some donuts in there, and she basically called me out, and she said, "Are you going to be the guy that brings me donuts every once in a while, and then thinks I'm going to send you a bunch of business?" I'm like, "Well, that was kind of the plan," but she's like, "That won't work." She's like, "We can get donuts every day," and she said, "You got to do something, different than that." And so we just started talking, and this was back before Crazy Socks became a thing, right? And luckily I got some on right now. I didn't even have a clue. So even to this day, these tacos, I don't know if you can see them, it's just got tacos on them. I normally wear them on Taco Tuesday. But, so I'm sitting there with her, and so she started calling me the Crazy Sock guy. And so, believe it or not, I started making that part of my thing because I wanted people to remember me not as an insurance guy, but hey, this is the guy with the crazy socks that comes around. Just something that's just different. And so, that's just a piece of advice for anyone listening, that if you can come up with any little thing to differentiate yourself, it's not going to hurt you. So, the crazy sock thing, everybody does that now, but I kind of did it before it was cool. And I still,
you did. You're the first person I know who's doing that. Believe it or not, I thought you were crazy.
I was. People
Right,
used to tag me on in Facebook
Right.
all the time, saying, "Hey, look, I got these crazy socks. I got these crazy socks." And I was like, "Oh my gosh!" And now I got a whole drawer full of them. It's crazy, but literally, pun intended, I guess. So I'm crazy, but anyway. So, all right. Well, that's good. That's good to know, because I know that a lot of people, really want to know, what they can do, and so that's some really good advice. So, next thing I'd like to ask you. Insurance has changed a lot, and I wanted to get your take and see, if there's a correlation, if it's just insurance that changed, or if maybe your business has changed. So, for those that you don't know, I used to, be a partner of a mortgage company, a couple actually that I, started one organically and built it and sold it and all these different things. But when we first started in the mortgage business, I used to have to take a handwritten application, fax it over to a place. I'd get a credit report faxed back to me 3 days later. It just took forever. These transactions took forever. Now I'm seeing things on TV, for insurance, for taxes, for mortgages. Here, get it on your phone, get it on your phone, get it on your phone. So how has the consumer changed in the mortgages? Because I know that people can get it on their phone if they really want to. I don't think that's smart. I don't think you should file your taxes on your phone. I don't think you should get your insurance on your phone. I don't think you should get your mortgage on your phone. I'm a little bit old school, maybe, I don't know. But what is your take on that? How has the business changed in your 20 years?
Yeah, there is a huge push in technology in our business right now. And you mentioned the ads all over TV. Press a button and get a mortgage, and there's actually ads getting approved for your mortgage in as little as 8 minutes on your phone. And that's obviously to cater to the younger generations, and there's a belief, our industry is divided. There's a belief that that's the way to go, and then there's the other half of the industry, and it's the old school in me that's, hey, the trusted advisor is the way to go. And no, you just can't press a button and do a $250,000 real estate transaction on your iPhone. I've been on the front lines of it, and I've seen both ways. Our company has explored, because we have explored at great lengths all the different technology stacking that's available in a mortgage process right now. We didn't want to jump out there and be the first ones. We kind of sat back for the last several years, watched it unfold carefully, and we've implemented some technology, strategic technology advances that's helped our company grow. Things that are smart, things that, for example, rather than faxing back and forth to verify somebody's employment, we can hire a service, press a button, and get it done. And so that makes sense. That allows us to streamline the process. We're not on the phone all day trying to chase around employment verifications and stuff like that. So that would be an example of a technology addition that's really improved, and it's at a very minimal cost to the consumer. Whereas, some folks are going all in and buying, thousands of dollars in expensive software and things like that, so they can say, look at me, look what I got, and that's something we've opted against. I've noticed, that as the technology has increased in our business, so has the cost of doing a home loan. The cost of doing a home loan is at a record high right now. The last time I checked, according to the Mortgage Bankers Association, the average cost of originating a home loan was somewhere around $8,700. It's a big number.
$8,700, is that, so if I'm the customer, that's what I would pay to get the loan?
That's the cost of the company doing business to originate the loan. You wouldn't see the $8,700.
So
you might see it in the form of closing costs. That's the overhead. That's what it costs for the technology. Okay, people would be surprised by that. I'm doing things like having to order transcription from the IRS of the person's taxes. Paying for the employment verification services thing, credit reports, updating credit reports, determining the flood determination of the property, for insurances, things, all kinds of things like that going to play. So you have salaries for underwriters to review all these things, obviously come into that number of building, brick and mortar, overhead, the whole 9 yards. But nonetheless, the cost of originating mortgage, it's in excess of $8,000. It's at an all-time high. Wow. And a lot of that's due, it's technology, and it's also regulation. Obviously regulation's a key thing that's been popping up right there. And so, no, I don't think it's in a place where you can press a button and get a mortgage. From a competitive standpoint, when I see quotes from the companies who do that, they're not competitive on price, and I usually win that deal almost every single time.
Gotcha.
And, I look at the worksheets. They have to bake in the technology in some way, some form. It's either going to go into the interest rate, it's going to go into the closing cost, or sometimes both. And usually, the more expensive the technology that company is employing, their price suffers hand in hand with that. Is what we found. So,
gotcha. So it's interesting that you say the cost to originate a loan is at an all-time high. That's no different in the insurance industry. For instance, right now, insurance is very expensive. Car insurance, home insurance. Especially like car insurance. There's several reasons why your car insurance is at an all-time high. But one is frequency. Right, there are now more claims filed than ever before, for a few reasons. But one of the reasons the frequency is so high is because of distracted driving. Right, texting and driving, all these things. People are distracted. They're too busy. They're trying to get their mortgage on their phone. Right, well, they're driving down the phone.
Right. That's
right. So they're trying to do all these things, and so they're distracted. And then you also once they have that fender bender, they rear end someone. The severity, the cost to adjust that is at an all-time high, because before that $500 bumper that they hit on the 1994 Civic was $500 maybe. Now when they hit the 2020 Honda Civic, it's going to be $5,000, because there's backup cameras and sensors and all these things that people don't think about. And so the cost of all these things are going up. And so it's we're in a time where I personally think all this stuff is outpacing inflation. And so we'll see what that does to mortgage rates. That's for a whole other conversation when we talk about rates. But it's very, very interesting. So you also said that there was a place where you can get a mortgage in 8 minutes. Right. All you guys listening, all the insurance people will know. There's that one out there that says, what does it say, 15% in 15 minutes? We hear that all the time on TV.
Right.
And what I used to tell my customers, and this is something that you all can tell your clients in the insurance world, is I would just say, look, if it only takes 15 minutes for me to give you your insurance policies, then you're not my client, because that's not enough. I'm going to take a lot more than 15 minutes for me to make sure that you're properly insured, because there's a massive difference between having an insurance policy and being properly insured.
Right. And
I think the same thing goes with like mortgages. Yeah, okay, you can get a mortgage written somewhere, but is it going to be the right mortgage?
Well, how are we approved for the mortgage in 8 minutes when we don't even know what the insurance is yet?
Right, exactly.
I don't even have the insurance, so that's the insurance is more, my debt-to-income ratio is more, the file blows up, so it's very, very generic, and it's a lot of guesswork. And so now the mortgage process these days, it still takes a good 2 to 3 weeks. Most closing under 30 days, but there's a lot of sweat work that goes in that takes weeks to perform, like the insurance, and seeing what is the coverage enough, how much is it, what's this going to do to my payment, and so on and so forth.
Sure, absolutely. Moving on, let me ask you this. So, in the insurance world, I'm not going to unleash any of my trade secrets yet. I want to see what you think on it, but the millennials are now, starting to take over. We're seeing the biggest transfer of wealth that this nation has ever seen, right? From the baby boomers transferring it, to Gen X, but then now to the millennials. So that we're going through the biggest transfer of wealth, all these types of things, and millennials are they're the ones with the buying power, right? So they're probably the ones that are buying the most houses. They're probably, getting the most insurance. They're doing all these things. And I know a few secrets about millennials, but I just wanted to ask you what your take on millennials are. Are they different than the baby boomers, our parents? Are they different than me, the Gen X? Are you seeing any differences in the millennials and how they are purchasing from you?
I do. When somebody calls into our office, I don't ask myself as soon as they say hello, am I dealing with a millennial or am I dealing with a baby boomer? And I'm going to change my script or the way things go. I'm all about, being a trusted advisor, creating value for that person any which way I can. But as I reflect on the calls and I reflect on the deals, there's absolutely a difference in culture, between somebody who's a millennial home buyer versus somebody who's, and the baby boomer generation who's done it time and time again. There's different ways that you can, fortify the relationships and build trust with those people. You talk to the baby boomer generation, they just like to talk. They want to be very friendly. You'll sit there and you'll go through stories. Oh, I remember when I bought my first house back in here, and this is what it was, and and so on and so forth. They talk about their family, the vacations they take, things like that. The millennial call is a little different. It's more direct to the point. I've done my research on AB. I want to validate that research, and so on.
Sounds like you saw some of the same things I've seen. So yeah.
Yeah, exactly. I think it's key to be in. We keep bringing up that word trusted advisor, but I think that's what the millennial caller is looking for. That's where accolades, you mentioned accolades at the front of this, that's where it helps to be in the Forbes magazines of the world and have the things that you do, because those things, they sell you without you having to. And so that caller sees that, they recognize and trust your opinion, and they're basically calling you to validate that the research they've done is right. And so as long as you're doing the right thing for that person and you are delivering fair and accurate advice, then you're going to win that business every single time.
You hit the nail on the head. The millennials do every single bit of research that they possibly can, but then they need mom and dad to rubber stamp, what they did, and that's where they look for that trusted advisor. They want to make the purchase from a trusted advisor. That's why I'm in, mortgage guys are going to go away, insurance guys are going to go away, CPAs are going to go away. It's all going to be done on. It's not happening, guys. It's not happening.
No.
Especially with this generation. And let me tell you something else that you're going to find that's very, very, very interesting. The millennials, and this is more for insurance than it would be for mortgage for sure, because insurance, we don't make much off the transaction at first. We make it over time, over and over and over from all the referrals. Like we may only make $100, by doing insurance for a customer. But if you treat them right, you're going to make that every year, over and over and over and over. And so the millennials are a much more loyal client and a consumer than the boomers or the Gen Xers. And the reason why is because they did it all themselves, right? They went out, they found the product, they bought it, even though you validated, rubber stamped it for them, even though you guys did and I did. They still, in their mind, they did it themselves, I did it. So if they're going to tell us
this is my insurance guy. This is my advisor. He's in my circle. I've got my insurance guy. I got my accountant guy.
Yep.
And my mortgage guy.
And they're telling everybody.
Yep.
And so if they switch, then what they're doing is they're telling everybody, I made the bad decision. They're not going to say they made the bad decision.
Sure.
So they are loyal. So you get them, you nurture that account, and they'll stay with you, forever.
This year was a record for us with repeat clients, all-time record in the closed business for repeat clients. And I would be willing to bet that a very large percentage of that was the millennial culture coming back as the mortgage rates have come down this year. A lot of them come back to the same place because they were loyal. That's exactly right.
Yeah, I didn't even think about that. I mean, I should, but you're right. So while in the insurance business, we touch our clients, all the time. You guys have to stay on top of them too, because heck, just me. I bought this, place I'm in, and then 6 months later you call me up. It's like, hey, it's time. We need to redo this thing because rates went. And so now, obviously, it's going to be pretty easy because I'm your brother and all that stuff. But you could have done that with anybody.
Sure. Actually, I was going down the list and you were next.
I was just next
on
the list.
I didn't give you any favoritism.
Right, exactly. See, that's what I'm talking about. So remind me not to add his contact information to his show notes. Excuse me. So, well, as we wrap up here, is there anything else like that you think that before we wrap up, just that you would like to add to the conversation about any type of things that you think would help out an insurance agent at all when it comes to the to gaining any type of referrals from the mortgage industry, or is it pretty much just the service and stand behind your promises and things of that nature? And obviously, if they can throw you a bone and give you a buyer, or not a buyer, I guess that'd be for a real estate person. Well, I guess it would be a buyer.
It's very cliche, guys, but gals. There's no magic bullet. There's no secret sauce. It is 100% hustle, effort. Right. There you go.
Every day,
hustling every day.
Every day, hustling.
That's exactly right. It's doing the right thing. It's being a professional. It's the way you present yourself. You come into that mortgage office, does this person know what they're doing? Are you a trusted advisor? That's a good point. As a mortgage originator, there might be an insurance question. Hey, this dude is in flood zone AE. He has a creek in his property. Is that a person? Is that an insurance person somebody I can call and they can answer this on the spot? Are they that good? Do they know? Do they present themselves well? All of that is key in building a successful business that's going to last. It's about being a professional about what you do, and then bringing value and building a lasting relationship. Do that, and you're going to be very successful out there. And that applies to anything you do, including insurance.
Awesome, man. Well, all right. Before you go, 2 things. One, I'd like you to share with me a referral on a book. One about business and one about anything you want. Just give me. The reason I'm asking you for this is I'm going to create a list of everyone of all the guests, and I'm going to make a reading list. And so one of them's going to be about professional, selling or whatever, and then one just about anything else. So give me 2 book recommendations.
Book recommendations. 2 books. I gotta choose 2.
Hit you on the spot here. Like I said, I wasn't going to, but you're my brother, so I get to.
There's a lot of great business books I've read, but one that goes with the topic of what we've hit on in this particular podcast would be the Blue Ocean Strategy. Author escapes me off my head.
Okay, we can look that up.
Yep. But it's a book about how to differentiate yourself in competition, which is exactly what we've been talking about here. When it talks about red oceans and blue oceans. When you are an insurance agent who just calls a mortgage company and asks for a referral, you're in a red ocean because there's 100 more of you calling the same loan officer. And so how do you get into a blue ocean and differentiate yourself from the other 100 insurance agents that's calling the same loan officer and blowing their phone up? How do you differentiate yourself and create a blue ocean that none of these people are doing? One way is to bring business to them,
Awesome.
Yeah, things like that. And
never heard of that, so I'm going to definitely check that
Blue
one out.
Ocean Strategy.
Blue Ocean Strategy, okay.
And the other one can't be about business, it has to be about something else.
Something else other than business.
I would go with the Dave Pell Short Game Bible. It's the best book about golf short game ever written because guys and gals, look, we're out. A lot of us we're business professionals. We're going to be at the club. We're going to be playing golf, and most people, they're just terrible. They suck at golf. And so that book's going to help you guys at least get a decent short game in place to get your scores respectable, to where when you're out there with your clients, once you've made it, this is for once you've made it, once you've executed the Blue Ocean Strategy, you've gone to the best loan originators, you've got so much freaking business that you don't know what to do with it. Okay, you can now get a decent short game, and when you go play golf, you don't embarrass yourself. So I'll read that one too.
Okay.
You definitely need to read that one.
I do. Okay. Just bear with me here. He's talking about golf, and I need to read books about golf and all that stuff. Let me ask you to do one thing real quick. Raise your left hand, turn your neck towards me, and point to right there, and tell everybody what that is on my wall right there. That little white ball in the middle of the car up there, and the scorecard that has a 1 on it. What were you there that day?
I was there.
You were there that day, right?
That was a hole-in-one.
Yeah, that flew in the hole, and I won a car, and all those things. Yeah. So before we start,
that's right. What was the score of that round?
We won the scramble. It wasn't a round, but Archie won the scramble. We won the scramble. I won a car.
Right. You won the battle, but not the war.
Yeah, I don't know. I got to check. So awesome, man. So. Well, thanks again. And,
thanks for having me, and best of luck with your podcast. Great work you're doing here and getting a message out.
Thank you. So what I'm going to do is I'm going to add all your contact information in the show notes. I've heard people on other podcasts say that, the show notes, so I don't really know what that is, but I'm going to figure that out. And I'm going to get all this stuff on iTunes and everything else. People think I'm crazy because I'm, the very first one I've ever recorded, I say, I'm going to get it on iTunes. Trust me, I'm going to get it on iTunes. And so that's it. So I'm going to sign off. Hey, just remember, in a world full of filters, be real, be you. That's it. Okay, I'm done.
Boom. Piece of cake, man.
Huh?
That's all.
Piece of cake. No.